Hey everybody, what is up? Welcome back to Funnel Trade. It's the long-awaited return of Low Effort Sunday, and I think what we're going to do today is just have some kind of stupid fun asking ChatGPT for advice on TCG investing, and we're going to see if it can possibly be worse than the advice you get on the MTG Finance subreddit. So let's start with just something basic. Let's say, what do you know about TCG investing? And, I'll be polite and put a question mark. And let's see. Trading card game investing involves purchasing, holding, and selling collectible cards. It shares similarities with other forms of collectible investing, such as comics or art, where rarity, condition, and demand drive value. Okay, all of that seems pretty reasonable. It understands it's based on these games, and it lists at least the top 3 purchased games. I don't really know. It's the top 3 investable games. I never really see anybody going on about Yu-Gi-Oh investing. I'm sure it's a thing. Maybe it's just outside of my wheelhouse far enough that I don't see it. TCGs are unique because cards have dual purposes. They can be used in gameplay, which influences demand beyond pure collectability. And yeah, that's actually a really good point. It's interesting that it includes that because not only do people want these things as collectible items, but also to play games with. Here's an overview of key factors: rarity and print run. Limited edition cards with limited print runs or special editions often appreciate over time. For example, Pokemon First Edition base set Charizard is one of the most iconic cards in the industry. Larger sets can dilute the rarity of individual cards, while smaller sets with desirable cards can retain or grow value more reliably. So this first part I would definitely agree with, larger sets diluting the rarity of individual cards. When we see something like, of course, I'll always go back to this, the Demonic Tutor Mystical Archive from Strixhaven. That card was just difficult to get because it came in the Mystical Archive slots of Strixhaven collector and set boxes. I don't remember if you got a Mystical Archive in every draft pack. I'm not sure. But even then, it was at mythic rarity within that slot. And so essentially it being a standard set with, 300 base cards, not mechanically unique, but 300 cards in the base set, it was difficult to pull that Demonic Tutor Mystical Archive card. And so it really helped the value of that card. Smaller sets with desirable cards can retain or grow value. That's kind of like it feels like a non-sentence. And that's the kind of thing that a large language model kind of AI like ChatGPT will do. What ChatGPT is doing is it doesn't think. It's not really even artificial intelligence. That just kind of gets assigned to it. I know people will argue with me about that, whatever. But it's a large language model. And so it's going in and it's digesting writings from all over the internet, which is why, there's probably going at some point to be big legal problems with what data do they train on. But it's basically taking things it reads elsewhere and it's regurgitating them in ways that it's been trained to do. And then it seems to write approximately human-like prose. So, you might get a sentence like this once in a while. While smaller sets with desirable cards can retain or grow value more reliably. Again, that's just like a nothing burger sentence. Anything with desirable cards can retain or grow. If something has desirable cards in it, it's probably not going to lose value. So that's the kind of nonsense, just slop that AI can deliver up from time to time. Conditioning. Card grading plays a major role in determining a card's value. Companies like PSA and Beckett grade cards on a scale of 1 to 10 based on these conditions. Cards graded 9 or 10 are significantly more value than ungraded or lower graded cards. So yeah, it did a good job there. It named probably the 2 generally biggest grading companies. Sometimes if you're into weirder niche things like pre-war baseball, there will be a grading company that has a great reputation for that, or post-war football, there will be some company that has a really good reputation for that. So, but it names generally the 2 biggest, PSA and Beckett, and it talks about the grading schemes correctly. Popularity of the game. Popular TCGs like Magic and Pokemon tend to have cards that hold value better due to larger player and collector bases. Of course, I guess ChatGPT somehow picks up on the ecosystem and how you need all of those people pushing money into it. Of course, it doesn't understand that, but it assembles that from data it was trained on. If a game is currently popular or experiences a resurgence, the value of key cards can spike. Yeah, that's a good insight. And I guess the corollary of that is true. When a game dies, like MetaZoo, the cards all go down in price. Historical performance. Iconic cards from vintage sets have appreciated substantially over the past few years, but it's crucial to recognize which cards have maintained long-term value and why. And again, you kind of start reading the sentence and then you get to here, and it's like, why does it even include that? That's the kind of thing your English teacher in high school would have marked out as just like filler fluff that doesn't add anything. MTG's reserve list, a set of cards that will never be reprinted, has created a scarcity premium for certain cards like Black Lotus or Mox Sapphire. Yeah, scarcity premium is definitely a real thing. Supply and demand. High demand cards used in competitive play can see price surges when they're featured in powerful deck lists or new formats, e.g. Commander. So, Commander's not exactly a new format. But again, it's trying to assemble this from everything it's read about Magic, about TCG investing, about investing, and then you give it this prompt, which in this case was a very, very simple prompt of tell me what you know, and this is the best it can do. Of course, if we assemble more specific and better worded prompts, we'll get better answers, and we'll do that in a few minutes. Player versus collector markets. Players want cards for deck building and will invest in formats like Modern, Standard, and Expanded. Okay. Collectors focus more on vintage, rare, or graded cards. Certain subsets of cards, like promo releases, championship prizes, signed or alter cards, are of more interest to collectors than players. Yeah, I'd say that's definitely true. Liquidity. While some cards are highly liquid and can be sold easily on platforms like eBay, TCG Player, or via auctions, others might require a longer holding period to find the right buyer. Yeah, sounds like good advice. Highly sought after cards tend to be easier to flip. Niche cards may take more time to appreciate. Okay? Most of this stuff sounds pretty reasonable. It seems that so far it's not getting a lot very wrong. It's just adding some fluff that really doesn't contribute in some cases. Market trends can vary dramatically. Pokemon cards saw a massive surge in 2020 and 2021, fueled by influencers and nostalgia. However, these spikes can lead to corrections, so timing the market is critical. And boy, I will definitely disagree with that. We did not see any correction in the Pokemon market. And timing the market is critical? Not really. If you buy and hold, you'll do great. It's just like stock investing. It's just like most forms of investing. If you identify great assets at a good price, you buy them, and then you're willing to hold them for at least several years, it's very difficult to lose money, especially on things like Magic and Pokemon. Staying informed through TCG dedicated platforms, news outlets, and communities is essential for tracking the latest trends in gameplay, releases, and market prices. Again, I guess that helps around the edges. I always talk about casting the wide thin net, buying a little bit of everything in the games you have conviction in, and then sitting on that and not trying to chase the trends. If you had chased the trends recently of selling off all your jeweled lotuses, then now that WotC took over Commander and said they are going to be reevaluating the recent bans, well, jeweled lotus then spiked back up in price. So you basically would have sold low, and if you wanted back in, you would have had to buy high. And so following the short-term noise would have been very bad for you at that point. And that's really one of the long-term lessons I try to teach on this channel, is that most market news is unimportant short-term noise that you can ignore. You need to have your long-term theses, and you need to stand by those and unemotionally follow through on them over and over and over long periods of time, and you'll do very, very well. Diversification. Like any other investment, diversification across different games and card types can spread risk. While certain cards might see huge gains, others can stagnate or lose value. We're essentially diversifying across Magic, Pokemon, Flesh and Blood. We're diversifying to some extent across the products within those games. We're diversifying definitely across the releases within those games, the specific expansions. So yeah, you definitely do want the diversification. And sealed product on its own always has that mutual fund-like characteristic where it contains many hundreds of unique cards. Speculation. Some investors speculate on new cards that are introduced in new sets or expansions, hoping they will become sought after. Speculating can be risky, especially if the card doesn't pan out in competitive play or collectability. I will, for the most part, say speculation on cards in the TCG world is a fool's errand. Even as the hopeless gambling addicts on the mtgfinance subreddit themselves say, most specs lose money. And that's the reality. Most of them go beyond losing money to the point where if you wanted out from under the cards, you would have to spend additional money in shipping fees and selling fees and things like that to get out from under the cards. And so most specs are disastrous, especially on new cards. If you wanted to spec on reserve list is a whole different beast. If you wanted to spec on something that always looks tempting to me, but I never bite at, but it's kind of the medium-term Pokemon singles. I think there's a lot of stuff there where you can basically take the advice of the market, which is what has moved up a lot in the last 6 months from recent sets, say within the last 6 to 12 months, and you can take that as the market telling you that those cards are potential long-term winners, and then you go in heavy on those cards. Now, is that always going to work? I don't know. I've never actually attempted this strategy. It's something that looks good, and it certainly looks better than buying 600 copies of Mudhole, thinking that somehow one day the world will become too short of that card, and it will be too good and you'll somehow make money. So, example of high-value TCG cards, Black Lotus. Okay, yeah. First edition Charizard, base set, Yu-Gi-Oh! Tournament prize cards. Okay, those all seem like solid examples of high value cards. I mean, it doesn't really tell you much about TCG investing because, again, investing in those kind of cards is its own beast. They have low liquidity. It's hard to move them because they're very expensive. That area of the market is rife with fraud. Both historic fraud that still exists in terms of counterfeit cards still floating out there that were maybe made 10 or 20 years ago, and new current fraud. Popular formats for buying and selling TCG cards: eBay, TCG Player, Heritage Auctions, StockX. Okay, so that's the end of the answer for this. It says TCG investing is a dynamic market with opportunities for growth. Man, that's some corporate speak. But it's also one that requires thorough research, a keen eye for trends, and well-planned strategy. Yeah, I mean, I'll say well-planned strategy is the biggest part of all investing. So let's ask it a follow-up question. Let's say, should I speculate on individual TCG cards as an investment? Let's see what it has to say. It can be profitable, but it comes with significant risks. So it's essential to approach it with a clear strategy. Yeah, it's funny. I made, golly, probably 2.5 years ago now, I made a bunch of videos about threads on mtgfinance subreddit of people showing their specs. And my God, they were just train wrecks. Clear strategy was something that was absolutely not there in any form. Most of those people, their strategy was, I like this card. I think this card is good. And I remember one of them was it Boros Signet? Or maybe it was what's the other one? Like, I forget. I think it was Boros Signet. And it was like, this is a card that's reprinted all the time. Like, it's never going to gain traction, and it's an old card. So if it had some hidden potential in it, gameplay-wise, it would have been discovered. But it hadn't. And so it's like, there was no hope, and yet there was a guy on there who had made this big spec on Boros Signet. Here are the pros and cons of speculating on TCG cards and some considerations that might help you decide. High upside potential. I guess once in a while somebody hits the lottery on a card spec, but man, it's rare. If you do it correctly, yeah, that if is the big problem there. Most people don't do it correctly. Most specs lose money. Yeah, cards unexpectedly become staples in competitive decks. Limited edition reprints or cards from newer sets that grow in popularity can skyrocket in price. Yeah, I mean, that's the hope of every gambler, is that, it's gonna it's going to land on red this time and I'll double my money. But golly. Short-term profits. Competitive players often need specific cards for their decks, especially after new set releases. If you time it well, you can flip cards quickly. Yeah. The actually looking through the threads on MTG Finance subreddit, no, they don't flip quickly. They acquire stacks and stacks of a card over a long period of time, and then they end up stuck with them because selling them would cost more money. Nostalgia and cultural resurgence. Speculating on vintage cards from beloved franchises like Pokemon can pay off, especially when there's a cultural resurgence or anniversary event. Now, see, this is correct. And again, this goes back to stuff like early Pokemon, like reserve lists, things like that, where, yeah, there is a lot of demand because of the nature of it. And that's a huge difference in between speccing on modern cards and buying these older ones, is that those older, especially reserve list cards, especially authentic early Pokemon cards, no more of those are being created. But when you're speccing on Boros Signet, well, it's going to get reprinted again. It's going to get reprinted again 3 or 4 more times this year in various Commander precons. And that makes it disastrous to try to spec on. Low entry cost for some cards. It can be a low-cost venture with potential for large returns. Guys, if that's a consideration when you're investing, you need to rethink your investment strategies. If it's, I can buy this penny stock, or I can buy this shit coin, or whatever, because it's cheap, that's a really, really, really bad criteria to evaluate an investment on. You don't care about what the purchase cost of the asset is. You care about what the potential return with a certain amount of risk tagging along with it is, not what it costs to get into the investment. I mean, if you want to make an investment, a cheap investment to get into is lottery tickets. They cost about $1. And, you scratch them and then throw them in the trash. Cons and risks. Market volatility. Prices can spike dramatically due to hype, but can just as quickly fall due to reprints, format rotations, or being banned. Yeah, I mean, that's a good assessment of the market volatility risk. Reprints, cards that become valuable because of their utility, can lose value if they're reprinted. Magic and Pokemon can drop significantly in price when they're included in newer sets or special reprints. Yeah, we see that a lot. We saw enemy fetch lands from Modern Horizons 2. They had historically been in the $30 and above. And Modern Horizons 2 was in print for so long and opened so prolifically that most of the base versions of those enemy fetch lands got down into the low teens. But, once the set went out of print, they started to dry up pretty quickly and the price started to rise. Liquidity issues. Not all cards are easy to sell quickly, especially speculative picks. Some cards may take time to appreciate or require niche buyers, meaning you need patience. Now, the big one here is selling quickly. When you have 600 copies of Mudhole and it finally goes from 3 cents to 6 cents and you think, holy crap, I can double my money, then you're going to be hit with the brick wall of reality that nobody wants thousands of copies of Mudhole and you just can't move them. There's no demand for it. And that's one thing you see a lot on MTG Finance when people go speccing on garbage modern cards, is that they end up with these huge stacks of them and the buy lists to take them off your hands are not deep enough. The market velocity is not fast enough. And so you literally just can't get rid of the cards like you thought you could. This isn't the stock market where there's constantly an order book of millions of shares deep ready to buy your stock when you want to sell it. Condition sensitivity. Minor differences in condition can drastically affect its value. Yeah, I mean, that's one reason why when it comes to singles, I almost exclusively deal in pack fresh. You remove that complication. You have to ask yourself in your single selling business, is the complication of grading cards worth the additional money? And it depends on what your opportunities for acquiring cards are, what kind of volume you're trying to push. Do you have employees that can do this at a profitable rate compared to their salary and the total cost of employing them? And a lot of other things. And for me right now, it doesn't make sense to worry about condition. And so I sail everything into TCG Player as near mint, and once in a great while they reject something. And that works great for me. Basically, I rely on TCG Player to do the conditioning for me. Knowledge and research intensive. Successful speculation requires extensive research. Yeah. Extensive research into things like this video and figuring out that you shouldn't be specking on modern cards. You need to track trends in deck lists, player preference, upcoming releases, and market fluctuation. Yeah, that's something that the people over there on MTG Finance just don't take into account, is that if you actually wanted to try to make a business out of specking on garbage modern cards, the amount of research you'd have to do is tremendous. And the amount of just every day reevaluating your positions, it's going to be huge. And that's why sealed product is so much better. It's so much easier, and when you're ready to move it, hey, you can move one box for hundreds of dollars instead of worrying about who's going to buy list the next 50 copies of Mudhole. Capital tied up. Unlike more liquid investments, speculating on TCG cards can mean your money is tied up in physical assets that may take time to sell. Of course, that's just the liquidity of problem of any investment. I mean, real estate is one of the slowest investments to sell. It's still great to invest in, but when you want to sell a piece of real estate, the buyer's going to want to pull the title and look at liens, and their underwriting is going to have to be examined. You're going to have to do the underwriting to start with. They're going to have to get the loan. There's tons and tons and tons of stuff that has to happen. And most of the time, selling real estate is a 4, 6, 8 week affair. So the liquidity is low. And similarly with specking on garbage modern cards, most of these cards, the liquidity is near zero. So it's just terrible. Factors to consider when speculating on individual cards: format, popularity, and rotation. Okay, yeah, that's a good one. Banned and restricted lists. Obviously, you don't want to speculate on banned cards. Most of the time, I guess there were a bunch of people who jumped onto the cultural sensitivity banning in 2020, I guess it was. Yeah, and that hasn't worked out. I mean, Jihad was always a low population card that was sought after just because it was old. I mean, I don't think banning it and making it where you can't see the picture of it on WotC's websites has really done anything for its price. It was always going to keep appreciating just because it was an old and rare card. Card grading. If you're speculating on older cards with a history of value appreciation, consider getting them graded by a reputable company. Hey, that's actually really good advice, And you shouldn't be speculating and grading a bunch of new cards. But if you are going to do something like, say you had decided to buy a Mox Diamond every month. You were going to buy a Mox Diamond and put it back for the long term. Well, yeah, you should probably every 6 months or so send them all into PSA to be graded and slabbed. And then eventually you'd have a giant stack of slabbed Mox Diamonds, and I bet the return on that would be pretty good. High-grade cards can command significantly higher price. Grading costs money and takes time. So it isn't an option for low-value speculations. Yeah, definitely don't do that. I see a lot of speculating on eBay on various old superhero cards that I'm into. And it's the weirdest thing because you can tell that they just bought up a bunch of cards, probably off of eBay. They sent them into PSA, and then they come back graded 7s and 8s and occasionally 9s, and then they list them up for sale. And it's like the sale prices they're asking for just typically doesn't even cover shipping both ways, insurance both ways, grading fees, the original cost of the card. I mean, they're taking a huge bath on it by trying to sell off these slabbed cards that just did not grade well. And I think there's a constant rotating door of people just like losing money attempting that. Timing is everything in speculation. Yeah, that's why it doesn't work. Cards that are featured in championship winning decks that are revealed to be powerful in new formats can see sudden spike increases. It's important to know when to sell and when to hold. But, that comes back to the problem of a lot of these garbage specs you can't sell because there's no liquidity. Diversification. I would contend there's no actual diversification in specking on garbage cards. They're all garbage cards. So you can't really diversify into different garbage, better garbage, less stinky garbage, garbage that costs me less additional money to get out from under. Tracking trends in competitive play using MTG Goldfish. and limitless TCG for Pokemon. You can track cards. Yeah, I would say most of the time, by the time you get on that, you've missed the boat. There's always going to be people faster than you. Or, in other words, you being the fastest person in the market is unlikely. And so you need investing strategies in all types of investing that do not rely on privileged information, that do not rely on you being the first person to know something, and do not rely on you being the fastest person to get to a market and take advantage of something. New sets versus vintage. Vintage, speculating on vintage cards can offer more stability, but they're more expensive to acquire upfront. Yeah. Cards from new sets can become irrelevant quickly. Yeah, it's a big problem you see in standard rotations. Example of successful speculation: Reserve List, Black Lotus, Dual Land. Yeah, duh. and this goes back to something I talked about a minute ago, which was you can rely on the market to tell you what a good investment is. And so if you go out there and you just, let's say you go to TCG Player and you pull up, you type in unlimited, and you let it show you all the results for cards from Magic's unlimited release, and then you sort that by highest to lowest and cards only. And so what you'll see is probably something like, since it's unlimited, it still had power in it. And then you'll see Wheel of Fortune and Dual Lands, and then it'll start going down the list to like Copy Artifact and Fork and things like that. And that's the market telling you what the best investments are. It's the ones that have already appreciated the most. And with something like collectibles, especially old unlimited printing reserve list cards, there will be no more of those. And so they will continue to appreciate faster than other things in the market. And so it feels bad to buy a Dual Land when they're already $600, but it's going to appreciate a lot better than other rares from unlimited Magic that are cheaper. If you go out and you find whatever, Benelish Hero, a common, and maybe you can still get an unlimited copy of Benelish Hero. I have no idea. Let's say it's $10. You're going to do a lot better buying one Dual Land than 60 Benelish Heroes. That one Dual Land is going to appreciate faster. And when you go to sell it, more people are going to want that one Dual Land than you will have. Then you'll be able to find people to buy all those Benelish Heroes. And so it's hard for people to stomach that because they feel like they've already missed out on the price appreciation. But going forward, Dual Lands are going to continue to appreciate faster than Benelish Heroes. And so let the market tell you. Pokemon special promo cards, such as tournament prizes and things like that. Yeah, that's actually really good advice, especially considering Pokemon is driven so much more by collectors and not players than aiming for those really rare things like Pikachu Illustrator cards, for instance. I think there were 29 of those ever created. Final thoughts: speculating on individual TCG cards can be profitable, but it requires careful research, knowledge of the game, and attention to markets. To minimize risk, diversify your investments, stay informed, and be mindful of timing. Yeah, I'm going to say all of that's bad. Like, just don't do it. Speculating on modern cards is always terrible, and speculating on reserve list is almost always going to be okay. And so I feel like the conclusion can be much more stark black and white than, oh, well, it can sometimes work out and sometimes not. It's in the TCG world on singles, it's more like certain categories of cards almost always work as investments, and certain categories of cards almost never work as investments. And then there's like very little in between. So I think it's much more cut and dried than this. So I will say that, ChatGPT, it's doing just barely better than mtgfinance on advice. Because like if mtgfinance subreddit wanted to give you good advice on speccing on modern cards, they would just be like, if you try to talk about it, we'll ban you from the subreddit. That would be the best advice they could give. And to just be like, no, it won't make you money. No, it's not a lottery ticket. You might make money 1 out of 30 specs, but it'll still be more than swamped by the losses on the other 29. So does ChatGPT give better advice? Yeah, marginally. It still gives some bad advice. It still has a lot of puff in it. And, it's a large language model. It's not really thinking, it can't really learn. But is it better than MTG Finance subreddit for advice on MTG investing? Yeah, by a very narrow margin. Let me know what you think, guys. Thanks everyone who makes this content possible, especially my very generous supporters on Patreon. Like, comment, share, and subscribe, and join me on Final Trade.